Afternoon, distinguished guests, brilliant speakers, and the vibrant youth of our profession. I am CA Shubham Kumar Jain, convener of Titlagarh CP chapter of EIRC of ICAI. It's a privilege to be the MOC of this session as we celebrate the golden jubilee of our regional conference under the banner Ethics, Youth, Empower, I. In a world where the only constraint is change, risk is the plot twist we did not see coming. Today, we are not just talking risk, we are giving it a makeover, a remix, a fresh perspective. And now, the Avengers of Risk, Dr. Sandeep Dadia ji, the wizard who makes the impossible insurable. Sir, please welcome on the dais. A huge round of applause. Now, Sri Bhagwant Sharhadi ji, the steel sharp strategist who turns volatility into opportunity. Sir, welcome. A huge round of applause for sir. Now it's time to call CA Sunil Mehta ji, the numbers whisperer from Coal India, proving even the toughest asset have a soft spot. Welcome, sir. Now, Miss Rekha Solanki ji, the insurance enchantress who turns uncertainty into confidence. Please welcome, madam. Now I'd like to call the steering the stellar ship Sri Lal Babu Chaurasia ji, a maestro of corporate planning. Sir, welcome. Sir, now I call this meeting to us. Sir, kindly be seated. We'll have an introduction session. Thank you, sir. Now I'd like to call my colleague, Deputy Convener of Titlagarh CP chapter of EIRC of ICAI to give a brief introduction of Dr. Sandeep Dadia ji.
Good afternoon all. I would like to introduce Dr. Sandeep Dadia ji. Dr. Sandeep Dadia is the CEO and country head Asia board member at Lockdown, the world's largest privately owned independent insurance broker. He joined Lockdown in Feb 24 after leading Aditya Birla Insurance Broker Limited for 12 years as the CEO and principal officer. He has over 20 years of experience in the insurance industry, spanning across broking, reinsurance, and third-party administration. An ambassador of growth and change with the distinction of leading successful insurance broking business through innovative strategy, process improvement initiative, and implementing a superlative culture work. His intense focus is on scaling through digital and technology-based initiative as he bridges business strategy, targeted objectives, and people, problem and change management with industry-leading employee relation and talent management ability. We welcome you, Dr. Sandeep Dadia.
Thank you, Chirag ji. Now I'd like to introduce Sri Bhagwant Sharhadi ji. He is a seasoned professional with over 3 decades of diverse experience, grounded in the discipline of his early career as an officer of the Indian Air Force. He currently heads the insurance function at Tata Steel, driving enterprise, wide risk and insurance strategy. Prior to this, he led insurance functions at ABB India and JSPL, establishing a strong track record in building robust and innovative insurance solutions.
Now I'd like to introduce CA Sunil Kumar Mehta. Shri Sunil Kumar Mehta ji is former CFO, Executive Director Finance, Coal India. He is a chartered accountant, CS and BCom honors. His professional experience, Coal India Limited from April 89 to 30th November 24. He has diverse experience in functional area of finance, that is HOD of central accounts, treasury taxation, cost and budget bill, internal audit, IPO, OFS, company secretariat function, marketing and sales, including pricing of coal. He also served as independent director in Mahindra MSTC Recycling Private Limited, Credifin Limited, ICAI EduSkill Private Limited. His achievements, some of his achievements are Chairman Dhanbad branch of CIRC of ICAI 2011 and got second best branch award of CIRC of ICAI in smaller category. Co-opted member of Committee of Member in Industry of EIRC and CIRC of ICAI. Co-opted member of Internal Audit Standard Board of ICAI 23-24 and written technical guide on internal audit of coal industry duly approved by ICAI Delhi. Author of Finance Manual of Coal India in 2023 and revised after a gap of 46 years. Committee member of CII CFO Committee for 22, 23 and 23, 24 and many more. We welcome you, sir, CA Sunil Kumar Mehta.
Now I'd like to introduce Mrs. Rekha Solanki ji. She has joined the board of National Insurance Company Limited as Executive Director in March 2025. She has 39 years of rich experience in all areas of general insurance, serving in the Oriental Insurance Company Limited in various roles like branch manager, senior divisional manager, deputy general manager, and many other posts. During her tenure, she worked in various capacities and handled retail business, project policies, and government health policies. As a general manager at the head office of Oriental Insurance Company Limited, she handled various departments such as marketing, personnel, crop, project development, KPI, financial inclusion, and many other posts. She holds a bachelor degree in commerce from Gujarat University and is also an associate member of the Insurance Institute of India. Welcome, madam.
Now I'd like to welcome our moderator of the session, CA LB Chaurasia ji, a seasonal professional with over 25 years of diversified experience in the manufacturing industry, bringing deep expertise in driving operational excellence and delivering complex corporate solutions across critical business areas, skilled in working closely with promoters and leadership team to design and implement effective business strategies that accelerate growth. Recognized for innovative thinking, creative problem solving and sincere commitment to achieving organizational goals with excellence. He is associated with Rasmi Group as Joint President, Corporate Planning since 2012. Prior to this, he worked with Siam Group, Kanoi Group and SRMB Group. He is associated with leading Chamber of Commerce and in EIRC as committee member in various committees. We welcome you, CA LB Chaurasia, sir.
Thank you, Chirag ji. Now I'd like to present a memento to Dr. Sandeep Dadia ji and give him a token of love from our side. Now I'd like to hand over a token of love and felicitate Sri Bhagwant Sharhadi ji. Now I'd like to provide a token of love uh, to CA Sunil Mehta ji. Now I'd like to call Miss Rekha Solanki ji to provide her a token of love. Now I'd like to call CA Sri Lal Babu Chaureshia ji to provide token of love. Thank you. Let the hour of insight begin. Please fasten your seat belts. We are about to navigate the thrilling terrain of risk reimagined. Over to you, Chaureshia sir. Thank you.
Hello. Thank you. Thank you very much. I think after introduction, the complete floor has aware about all the dignitaries on the dais from the different field of the insurance. Mr. Dadia, he is the country head and founder member of Lockton, which is the largest private held broker firm in India, in world, globally. And he is introduced last year in India only. Ma'am is already here, Rekha Solanki ji. She is the ED from the national, representing the national insurance. So one person from broker firm, one from the insurance company heading the lead position, and with us, two giants from the industry, and none other than Tata Steel as well as Coal India, the most profitable company and the giant in steel. I also belong to the steel industry. So little bit some hard questions, soft questions are going to be on the floor today on the dais. And I believe it will be knowledgeable as well as informative to the complete hall. Just before starting the things to the roundtable questions, I would like to throw a question on the floor also. We all aware that the business of managing risk. Here today we are for the discussion on the managing the business of risk. But very nature of risk is changing from the predictable. Normally the predictable and actual risk is going to be converted in the different, which is not known to us. Pandemic was the best example. So I must, everybody in the hall sitting here, they have some thought, some key risk point, which is very important for them, for the insurance purpose. And I believe at the end of the session, you must just guess a particular thing that will be the more risk in terms of the insurance for you. And after the session, we must conclude, let's see what we have thought that is matching or not. Thank you. Ma'am, let us start with the insurance company first of all. It has been around 3 years, the word AI. Every corporate is discussing about the AI. Let us start with the technology first of all. So, ma'am, basically, what are the ways to reduce the operating expenses and enhance the efficiency, and industry where the risk modeling and analysis is an important factor? To what extent are the component relying on AI? How effective are these tools to understanding the analytical nat cat risk, and how effective in the insurance company right now, ma'am? Please.
It is very important for the insurance company to use these AI tools. The very title of this program is Reimagining the Risk. So it is not the risk which we were thinking before some years. It is now reimagining the risk. In 2000, it will be little lengthy. It's
Yeah,
okay.
yeah,
Yeah. In 2004, when tsunami came, 2004 or 2006, when 2004, 5,
5.
yeah, when tsunami came, till that time we didn't know what is tsunami. we heard that word for the first time. When a pandemic came in 2020, 1920, for the first time we heard that corona pandemic. A lot of confusion initially about whether the risk is covered or not. So, this is the work of insurance company. This is what we are doing, accepting the risk. Now it is reimagination and using AI tools for those risks. At the time of underwriting, we are using AI tools. It helps us to assess the risk. Reengineering of the risk is also done through AI tools. You all must have heard about digital DSP, digital solutions in motor claims and health claims. Nowadays it is very common. When a claim, in case of a claim, motor accident claim, up to 50,000, the surveyor is not visiting the garage. On the basis of the images, on the basis of the video, the loss is assessed. And with the help of these AI tools, this chatbot and all, we are able to give good service to the customers, services to the satisfaction of the customers. So these AI tools are very important. But you were talking about cat loss also.
Cat loss also, ma'am. How we are going to...
For cat losses, I think you all must be knowing, it is catastrophic losses. In case of catastrophic losses, so before acceptance of those proposals, those premium, those policies, we do analyze the data. We do analyze that location, history of claims, and the future. What will be the future of this area, this location, this industry. So we analyze the risk keeping in mind all those data. And for that analysis, AI tools is very important.
Thank you, thank you. With me, Bhagwan Saab is also there. Same AI question, sir. Overall as the organization, what we are doing from the Tata Steel Group so that we can come to know how Tata Steel is going with the AI.
Right. AI, although everyone is talking a lot about it for last 2-3 years. Sorry. AI is a thing about which people are talking a lot for last 2-3 years. I feel it's still at quite a nascent stage from application point of view. Yes, people are saying, and it has got huge potential to do the things. Like the topic of today's discussion is reimagining the role. We have to reimagine the things not only from the historical perspective that what it used to happen, what did happen in say 5 years back, 10 years back or 15 years back. Yes, those are very important data points. There is no doubt about that. But we need to take that experience into it and do some kind of modeling. What could be the scenarios? For instance, I'll say a few years back or 10 years back, there was no talk about cyber security, cyber hacking, cyber ransom, and ransom and all that. Now those are not theoretical concepts. Those are very well happening time and again. And many of the big companies who have invested a lot on the cyber security, in spite of that, they have had the hits. On the catastrophic side, now insurance and reimagining has to move beyond the previous realm of property, assets, machinery and all. Now things go much beyond, which may impact overall business interruption. For instance, if there is a cyber breach, without any physical destruction to the plant or machinery, still the business interruption may occur, and to identify how did that happen and when did it happen, that itself will take a lot of time. So whole thing is reimagining. ESG, earlier we used to talk only about conceptually ESG. Today it's a reality. Now, suddenly European markets, they say we won't use coal-based power plants. Insurers or reinsurers based in Europe, they suddenly say wherever coal is used to a lot of extent, we will not extend our support, especially to the coal-based power plants. When they sneeze, we start shivering in India, the capacity restraints and constraints in that. So we have to reimagine the things. A few years back, nobody used to talk about volatility of the logistics. Today, something happens between Russia, Ukraine, Indian trades are impacted. Suddenly something happens, the Panama or Suez Canal is abrupted, everything goes over topsy-turvy. Nobody knows what's happening. So holistic and reimagining the things, what has happened, we can take experience out of it, but what could happen, we can take it, and AI could be a very good tool to give us some kind of indicator in modeling what could be in store in future. Thank you.
Sir, what Tata Steel is doing for same? How is the progress on the AI?
It is doing, we have started applying AI, I say it's quite at nascent stage from application point of view.
Okay.
A very much concept is there, people are working, regular internal discussions are happening, every department to department, how we would be able to use it to our function. So it's very much on the cards and things are rolling.
Thank you, sir. We are talking about the risk and everything. So everyday risk isn't going to be changed. Basically, the traditional risk in the insurance, now different type of risk we can say about the like pandemic, cyber attack, geopolitical, as well as government policies. So, Mr. Dadia, I request comment on that.
See, I think risk is inevitable, and wherever you do, whatever you do, risk is going to be there. Now, there is nobody who's able to project any kind of risk. Like Ma'am Solanki just mentioned, nobody knew what was pandemic, nobody knew what was tsunami. I mean, but however, if you go to see the solution to these events also has almost remained the same. I'll just take forward from the example of pandemic risk. 1917 was the last pandemic risk because of swine flu. And in 1917, the first three measures which people used to do was social distancing, wash your hands and mouth, and cover your face. What was it in 2020? Same thing. We did not have vaccine. The vaccine got developed after 10 years. This time, the vaccine was developed in 2 years. So the remedy is the same, whatever the event was. So what I'm only trying to say, I cannot project the nature of the risk. I don't know from where the peril will drop in. I can definitely give a solution for risk cover. So whether the risk is pandemic or property damage or any kind of natural catastrophic losses or any kind of otherwise risk losses, whatever they come, the solution is going to remain the same. So what we do is, we advise the client, you must buy the risk cover, an all risk kind of a policy which covers all the risk. So just to add for the people here, there are named peril policy and named exclusion policy. Now what are those named peril policy? This is covered and rest of the things are not covered. What named exclusion policies, these are the exclusions, rest all is covered. So we always ask the client to buy an all risk cover so that all the risks are being protected. So a black swan event does not hurt them more.
So, sir, basically in the normal policies, suppose we, as a property we take, so either geopolitical situation or due to some regulation of the government, if there is any losses, so these are covered over there or not?
You have to buy those additional covers. See, in insurance, everything is payable. And just to make the audience a little more convincing to them, I have a cup of tea. I want to make it more sweeter. What do? 1 cup, 1 tablespoon of sugar. I want to make it more sweeter. 2 more teaspoons of sugar. It becomes sweeter. Likewise, there is a risk. You want to cover your risk more, buy more covers.
So nowadays, if you, in today's scenario, whether big companies like Coal India, sir, ex-Coal India, it's fine, but we can discuss about that also. So in Coal India, sir, Sunil sir, for you questions. whether we are going, we have taken any kind of geopolitical or additional risk policies, like in the traditional, other than traditional way.
As you know, Coal India is the largest coal. Hello.
Hello.
So, Coal India is the largest coal producer in the world, and we have invested around 1,16,000 crore in plant and machinery. And that area is uncovered. There is no insurance policy on that. And we operate, our coal operation is very dangerous thing. There is always risk of machine breakdown, technology changes. One person from NCL is here, Mr. Yugal Kishore, he knows it very well. One machine, fleet of machine has been imported from Russia. And there is a geopolitical problem with in Ukraine, and that machine was, could not be delivered in time, and there was a risk of foreign exchange also. So I've handled this, and I think that in coal mining, not only in Coal India, but also the commercial mining, there is no risk coverage. So this industry is running with a full risk, 100% risky business now.
Very genuine question, Sunil साहब, and from the industry point of also, मौका भी है, दस्तूर भी है, यहाँ broker भी है, insurance company भी है और industry भी है. तो let us, sir, very frankly, in today's scenario, I have approached to the insurance company for getting an insurance for the coal block, but nobody is interested. All ma'am, sorry to say, but all are just seeing the risk benefit over there in the policy. But nobody is ready to provide. India is now in a growing stage, and mining is going to become a very big sector over here. And with the Modi ji vision, and everywhere in coal mining, critical mining, coal, iron ore, major mining, everything is going very fast. But there is no coverage at all. We got the coverages like health ka le lo, iska le lo, machinery ka le lo, that is possible. But complete coverage is not available. I think Tata Steel and Coal India both are agree with my comment. So from
There is no insurance coverage.
From both of you, insurance company as well as broker, the same question is lying for both of you, sir. Please.
So,
Yeah, please.
see, I think we must understand the difference between good and a bad risk. Now, if there is a zero probability of a risk, would you buy the risk cover? No. If there is a 100% probability of a risk, would an insurance company give you a risk cover? No. So the range has to be between 0 to 100. If it is 10%, yes, you'll get a cover, but you'll get a much cheaper cover. And if it is 90%, you might get a cover, which is at a very expensive cover. See, all are running an institution which is for-profit organization. There is no social service here. So what we always tell the client is, how are you going to insure, now the risks which are non-insurable. So how are you going to insure the first loss? What is the risk management procedure, what you are following? So in coal block, so in any of these coal-based risk, how are you risk managing your risk? And mind you, risk management is a dynamic process. I've done some risk management activity today, and after 1 year I'll revisit it, it's not going to happen. Because in 1 year, 365 days, I mean, what we are doing, you introduce me here, that has also become a history. So let us understand that what is the risk cover you're looking at. And I think every cover is possible for a premium.
So I think, but there is no available coverages for the mines, basically, what I understand from the different insurance company. And one thing, sir, what is the objective of insurance? Hello. To cover the risk, basically. And there is no risk is taken by the single company. There is a reinsurance concept over there. You are delegating your risk to the different companies globally and in India also, GIC with other reinsurance company. So where is the major risk? But when there is a growing sector and it's going to become a part of very GDP, so you must get some solution over there so that the company can get some middle solution over there, company point of view as well as insurance point of view also, insurance company also.
I'll just add a point here. There was something which was called as HAZOP study, hazard and operability study. Now, if you are starting something, please get that done. And insurance is a very important part of that risk. Now, if you start something which is so difficult to insure, you should have two minds in starting certain business. Now, you already started the business. So now we have to find a solution for you. manage your risk, risk manage it. We have to convince, we have to make multiple roadshows to the insurers and the reinsurers, how they are getting convinced on their component. You make it a very high deductible, but yes, your risk will be covered.
Then what is the mean? There should be a solution for everybody. If it is a very high deductible, then where will we get the claim, sir?
See, I think most of the people misunderstand insurance as the birthright, which is not true. It is basically insurance company also will have to make money. Every person, it has to be a win-win situation. I'm not saying you should not be covered.
I agree, but there should be a solution for these things because it's going to become a...
There are solutions. So what happens here is, I'll tell you, in the market, you suppose, I'm not talking about you in person, a client has a bad risk, they have a good risk. Bad risk, they place with one insurer, good risk, they place with another insurer. Now, when you go as a basket approach, that look, I'm giving you a good risk as well as a bad risk together, that's where the game is. That's where your negotiation power becomes better. If you place only a bad risk, you'll not find a buyer.
Che-
It's not that all mines are not covered. We are insuring
Hello.
we are insuring many clients are covered with us. NLC, for example, NLC is our valued client, and we are underwriting their our policies.
I think Coal India is already here. He can say.
No mines.
NLC and all that lignite miles and all.
Telling about the insurance of some accident of some person only.
No, it is about mines also. That NLC, that lignite mile.
If you compare with
Yeah, they are our valued client.
coverage, either of machine, plant, or anything in Coal India.
Okay.
And you know that 1,16,000 crore has been invested in plant and machinery, and we are going to invest every year. Out of 18,000 capex, 10,000 in plant and machinery. So 10,000 is every year added in our plant and machinery, and that requires the insurance policy. At that time, you are not giving us insurance, anything. So we are mitigating our risk at our own. Coal India is taking risk of its own.
Sir, ma'am, Coal India is increasing coal production day by day. It's going to be 1,000 million ton basically. Anyway, let us divert the topic. Otherwise, we are completely discussing about the mining and everything. Sir, you have told about the good insurance and bad insurance. Good risk and bad risk. So basically, nowadays, if I take example, if somebody is from, anybody is from the industry, so he can understand, within the period of last 2 years, maybe a little bit harsh questions, just 2 years before the discount was 100% and then suddenly it was stopped because they are incurring losses and underwriting losses and everything, then discount is become to be 0%. And then gradually started with the, just 2 months back with the 10%, 20%, and now it is going to again at the same stage. So flexible, so volatile policy, how the budgeting will be done and how we will plan accordingly, we are not able to understand as an industry point of view because we are preparing the budget in the April month, and then there is a changes, suddenly changes, there is a zero discount. How it will sustain, ma'am? Comment, please.
So, ma'am, please. So, I'll tell you, the premium differentiation is very difficult for anybody to predict. It's market forces which decide. Like, you're not able to budget, we are also not able to budget because our brokerage also comes down, madam's premium also comes down with every risk which is getting discounted. I think this concept of L1 has to die. And it will die its natural death within few years from now. What is happening is people talk of L1 and H1. Why is it that nobody talks about B1, the best one? And what is the meaning of best one? Is the insurance company having great capacity? Are they reinsured properly? Do they have technology to support? Do they have technicals to support? Nobody's considering that. They just look at the Excel sheet, pricing it, and then they just forget, I want to go to the lowest. Who has taught us the game of lowest?
Consistency should be there, na?
And we also want it. I mean, it's not, but see, imagine, we are dependent on forex prices, we are dependent on capacity from the reinsurance company, we are dependent on Indian competition, we are dependent on multiple other factors. So it's not just one factor ruling. And I'll give you certain examples. Indonesia, there was a tariff, they went to de-tariffing, again they got tariffed because they could not control, and I would call it as a madness. One thing you must say, why are you buying insurance? So that if there is a claim-like situation or a claim, you want the money to be paid. Now,
Sure,
do you
everybody.
think insurance premium going 90%, will the insurance company be able to get your claim settled?
That is the regulator choice, na?
No, it
That
is.
is why I am asking about the consistency. There
When
should
the
be.
price is becoming soft, the conditions, the terms and conditions of the policy.
I think
No,
if
we
we
have
go
to
with the
learn.
words,
We have to, I think, learn from the markets.
Yeah.
There was a 2010 event, and I'll give about live examples. 2010 event of Thai floods. Entire one region, one section of Thailand was under floods, underwater for 6 months, right? Nobody covered the flood risk after that for nearly 1.5, 2 years. So finally, it'll boil down to what is the money left in the game for the insurers to pay.
I think India is facing the same situation for the Red Sea and Black Sea. The rate of GIC is around 0.10%. For any voyage from Red Sea or and war and coverage is also not, I think, not there.
They are giving. They are.
Sir, again,
They are giving me the 10
see, I'll tell you, I also get a little psyched by the headlines also when I read in the newspaper, industry has grown by 15%. Now, what is this 15% top line? Why are we not talking about, and we all are CAs here, all are very qualified people here. We invest into a company which is growing only in top line or who makes a healthy bottom line. I don't care if they don't grow in top line, but at least maintain your bottom line. Overall underwriting loss, as per my knowledge goes, in last 30 years, only 1 year there has been an overall industry underwriting profit. Rest all the years, there are losses. I want my insurer to be profitable for you to get the claim, settlement.
After so many years, there should be some system over there like where you can earn profit and the sustainable growth for the insurer also accordingly.
So it is not about profit or loss, it is about sustainability.
Yeah,
The insurance
sustainability
company
only.
should-
Let us, two giants are already here, let us have some conversation with him. Sunil sir, as a digital transformation accelerates, cyber risk and are rising. Could you explain how you are covering about the cyber risks, geopolitical risk and other than the traditional risks basically?
Our mining industry faces major only the operational risk. Cyber risk, the Coal India has started ERP and SAP system for the cyber security, and we are constantly investing on the cyber security so that the cyber risk can be mitigated, and our data and our, especially we manage around 40,000 crore in banking transaction, FDs, mutual fund. So that should be protected. No one can hack our bank account. So we have invested a lot of money, and I think the Coal India is, as of now, the cyber free, and the protection has been taken to mitigate that risk. On the geopolitical issue, it depends upon the situation of the world, and we have faced geopolitical, especially the Russia and Ukraine war. Our machinery has been stopped in the sea for many, many months, and we have faced a lot of problem in the payment of foreign exchange. And still, around every year we import around 1,200 crore for import of plant and machinery. And in case of the geopolitical issue, our machinery stopped in the sea area, that affects our production also. And the foreign exchange always risk, because the dollar is, rupees is decreasing and dollar is appreciating. So that risk is uncovered in Coal India. And we have not taken any hedging risk, the foreign exchange hedging risk, that is uncovered in Coal India. And that should be, management should now think due to geopolitical, the foreign exchange risk could be covered.
Sir, same cyber question to the Tata, basically. They are running the plant, and in nowadays we have heard that a lot of cyber, due to the cyber, by using the AI and all these things, plant should be stopped over there. Plant can be stopped, operation can be stopped there. We heard a lot of news in the newspaper and media also. That can be also happen with any of the company in India too. So whether we have taken any kind of production and how we are going to mitigate all these things.
Like,
Yeah, mic is fine.
okay, like I said earlier, also, okay, one thing, since we all of our talk is confined towards insurance, let me tell basic reminder to all of us, whatever side of the insurance side we are, whether insured, insurance company or broker, The fact is, we talk about risk and insurance. Taking or not taking insurance does not reduce or increase your risk. Risk remains, it's only transfer of risk. This is the
Absolutely.
fundamental thing which many of us don't appreciate, that कि insurance ले ली है तो अब खत्म हो गया, कुछ खत्म नहीं हुआ. Risk very much remains there, only the hit goes to the insurance company pays for that. Apart from financial supporting for the loss, other than other intangible pains remain with the insured. Those are not paid, those cannot be paid by any insurance company. That is number one. So whatever measures one should, as an insured, should take care of is they should act as if they are uninsured. Yes. We are completely uninsured. What best we can do within our resources or within the capability or whatever scenario they have worked out internally, whether it's a medium risk, high risk, low risk, or whatever. In the impact side also, it's a low impact or high impact or medium impact, whatever be the classification. So that is fundamental. So cyber, when it's going to hit, where it's going to hit, nobody knows. And the best of the companies in the world got hit with that. Tata Steel invests a lot on the IT systems. It does a lot to avoid that. Such a situation arises. Over and above, it has built in some sort of redundancy also in the systems. If something goes down, there is plan B, plan C and all that, so that the impact is reduced. On the top of it, there is a decent insurance policy with a decent number. It's very much in place, and it's not that today Tata Steel has started taking this policy after hearing a couple of such instances somewhere in the world in last 2-3 years. This policy is in place for more than 10 years or so. So it's very much there, but at the same time, internal systems are being strengthened to whatever limit possible, whatever is allowed internally, budgeting and all that, so that to minimize the impact of such hits. That's it, sir.
At Tata Steel, lot of coverage is required, lot of risk coverage is required. How you plan accordingly? Basically, for complete coverage, you have a great asset, health, basically human assets.
Right. Human assets and Tata Steel, as being known in the market, is a very pro-employee kind of organization. Till about last year, the OPD used to be covered unlimited. Unlimited OPD for the employees. This year they have started putting some limits. So OPD was full family, complete limit. Otherwise also, it's full. Although the policy may say the sum insured is say whatever 2 lakh, 5 lakh or whatever, over and above anything company used to pay. So that used to be the thing. Now slight restrictions from that level they are doing it. Employee is the asset. There is no doubt, whatever be the, it's a man behind the machine. That is important. Machine is important, but machine on its own cannot do anything. They cannot do anything. It's a man behind the machine. So when a company invests so much in training, upgrading an employee, why not spend a few more to make, so that the person remains physically and mentally healthy to operate the things and contribute to the overall goal of the company.
Truly, sir. True about the Tata Steel. They take care of health and human assets properly. Mr. Dadia, now let us have some concept about the reinsurance to the hall, basically. What is the concept of reinsurance? How globally reinsurance companies are doing and how India is doing in that. We think in India, GIC is only the biggest player and a few new players are coming over there. So let us have a thought about, discussion about the new reinsurance, please, sir.
So, yeah, reinsurance is an integral part of every insurance company's program, and for brokers also reinsurance play a very significant part. These reinsurers, and when we talk about the largest reinsurers of the world, I mean, we have a Berkshire Hathaway, we have a Munich Re, we have a Swiss Re, we have Hannover Re. 3 of them are present in India, 1 is present outside India, but still they are underwriting Indian risk. So every of the risk which is going to an insurance company, most of them is reinsured. Now for an example, I'll just give you the property risk which you spoke about, Lal Babuji. So the property risk, nearly 74% of the risk is reinsured, which means 26% is retained by the insurance company. Marine has a similar average plus minus 2-3%. So all these risks which are being reinsured. Now when there is a reinsurer who takes the maximum risk on their balance sheet, it is their rates which will be quoted. In India, nearly total Indian risk put together, and I believe if my numbers are, if I rightly recollect the number, nearly 71,000 crores of risk is reinsured, of which nearly 45,000 crores goes to the GIC and other goes to the other international reinsurance market. So GIC is definitely a great, very important player in the entire ecosystem of reinsurance. However, GIC is also retroceding. They also need to reinsure. But the rate, currently what India is paying, I see a time where reinsurers will shy away from India insuring or reinsuring Indian companies. So that's a big risk which we are taking. And just for the knowledge, I'll not go beyond that. Reinsurers have two types, treaty and facultative mainly. Most of the treaty reinsurers are on proportional basis, which means the grounds up from 0 to whatever 5 lakh crore of the risk which is being reinsured by an insurance company is fully reinsured as a layer. Now globally what happens here is they are always on a non-proportional basis, which means only a first layer of insurance is retained by the insurance companies and excess is taken by the reinsurers. So there is skin in the game for both insurance company as well as reinsurance company. There are thousands of reinsurance companies that, and the biggest one operational, I mean, even if it's a 5 lakh crore risk, when we go to Lloyd's market in 2 days, the entire risk can get absorbed. So we were, we were part of the largest oil refining company in the country. We just got a mandate and we placed the risk. This is just about last evening. So of course, rates are falling. So insurer, reinsurers both will have to play a very crucial game in giving the capacity to the client, which is either an insurance company and direct to the client.
Just on the same line, basically, ma'am, reinsurance business having a lot of opportunity, a lot of scope in the global market.
Yes.
But India, why it is only GIC and very less companies are here? How we can increase it accordingly?
So earlier it was not allowed to place this. The insurance companies were placing the business to foreign insurance companies, but in India only one insurance company was given license. So last year they have given license to one more company and this year also. So now there are 3 reinsurance companies in market, but many foreign reinsurance branches are here and many cross-border reinsurance are also there. So we are reinsuring with GIC. Firstly, we'll try with our domestic reinsurer and then we place our business. Yeah.
Just as an industry point of view, when the discount was gone away, so normally we approach the insurance company ki bhai, if it is possible, so we can have a reinsurance from other side, and where so all companies are saying that the companies which are associated with the GIC may not be able to fetch direct quote from the international level. So there is some kind of monopolistic approach in the insurance basically. Can we say like that? Mr. Dadia, you want to say? Yeah. Please.
I'll add one more point here. Why insurers and reinsurers are not coming to India? I'll just add something. As finance professionals and I also being from the BFSI sector, what is that best 3-letter word we want to hear? It's not something which my wife told me 30 years back, I love you. No. It is about the ROE. What is the return on equity? If there is no money to be made, I don't think insurers will be entering India beyond a point. Second thing about, your question was about, second question was?
Monopolistic approach.
No, it's not monopolistic. So I'll tell you something. As far as I understand, I'm not here to comment on GIC's behalf, so I don't know. But what GIC says is, I want to insure this. And I will not insure this. They've got all the right to say, I will insure and I will not insure. Just they being standalone company doesn't mean it's a monopolistic approach. So they want to make money, and I don't think it's a listed company. They are answerable to the shareholders, which is government and the public shareholders. And if they want to make money, how can we stop them? So basically what they are saying is, this is my price, this is my rate. If you have better covers, please go anywhere you want to. And that is what they are saying. It's fair for them to say that.
Thank you. Thank you, Mr. Dadia.
Yeah,
Yes, sir, please.
one thing I'll say, and which has come up a time and again in your conversation, in your questioning, that the rates are very unstable. This year it is X, next year it could be X plus 30%, further next it could be minus side also, which puts everyone into a very embarrassing situation, apart from the budgeting and all those things. There are ways and means, like the topic of the discussion is reimagining. For that also we have to reimagine. We can't use the previous methods and trying to see that if we get a new result, nahi milega. वो करेंगे. There are ways and means. Of course, for India, those things are very nascent, but for companies like Lockton and other brokers and other developed market, they've got solutions. Why not form a captive? In the captive, those solutions are there. When the rate goes up, the captive also supports that. When the rates go down, a captive maintains a buffer for that. So there are ways and means. The question comes, are we as Indians, for most of the conglomerates, are we ready for that? The approach is, why to get into so much of jhanjat? ये सस्ते में तो मिल रहा है, अगली बार देखेंगे. So this approach, every year the same thing repeats. Ki okay, do it this year, next year we'll see that next year never comes. So we have to firm up at some stage, firm up our policy and do it over a period of time, maybe 2 years, 5 years, 7 years. Things will very much stabilize, and to a large extent, these can insulate themselves from the vagaries of the market to some extent. It may not be zero, but yes, there will be cushions to take care of from the vagaries of market fluctuations.
I think, sir, from Indian industry perspective of view, there is no harm to pay if we are getting the proper services over there, proper solutions over there. Now India is changing. Even in the individual level, the consumption level and everything, we need the quality things. So industry, who is running at a very large scale, always look for the quality things. If it is there is a solution, so industry will also come forward to cope up with that, sir. I believe so that.
And I would like to add something here. For industries like Coal India or Tata Steel, this volatility will not be there. If you are sticking with an insurer for quite a long time, then stability of premium is there. If every year you are going to find that L1 rate, if someone is giving it you your policy at a lower rate and you are going with them, then this problem will arise. Otherwise, if you are with the same insurer for a long term, then stability will be there.
Thank you. Ma'am, one thing is there, I think Mr. Sunil sir also we agree with that, the penetration of insurance in India is very low. And I think one data, yesterday I was just chatting on the AI that I think it has been reduced from the 2024 benchmark also. What I read, maybe I don't know, but in social media it was appearing over there. Sir, ma'am, just for everybody, like mutual fund, they are doing quite good. कभी तेंदुलकर को लेके आते, कभी द्रविड़ को लेके आते, इंश्योरेंस सही है भाई, म्यूचुअल फंड सही है. तो ऐसा कुछ हम लोग भी क्यों नहीं करते हैं कि जो इंडिया में जो लैक ऑफ नॉलेज या लैक ऑफ जो भी बोल लीजिए, अपने रूरल पॉइंट पे तो कभी भी पहुंच ही नहीं पाए. मेरे को लगता है कि इंश्योरेंस ज़्यादा वर्ड जो है रूरल में तो अप्रोच ही नहीं उस हिसाब से उस चीज़ को. तो व्हाट वी आर थिंकिंग टू इंक्रीज द पेनिट्रेशन, मतलब पूरा कवरेज करने के लिए नेशंस को कैसे, व्हाट आर द स्टेप्स ओवर देयर फॉर एवरी मेंबर ऑफ द पैनल, दे हैव देयर ओन सजेशंस प्लीज.
सो जैसे हमने देखा था म्यूचुअल फंड सही है वाला टैगलाइन दिया था गवर्नमेंट में, गवर्नमेंट ऑफ इंडिया ने. यूपीआई पेमेंट सही है करके वो वाला एक गवर्नमेंट का पूरा वो बना हुआ था. इंश्योरेंस के लिए भी सेम बात है. IRDAI ने एक बहुत अच्छी चीज़ें उन्होंने निकाली है, दैट इंश्योरेंस ट्रिनिटी दे हैव प्लान. सो बीमा सुगम, बीमा विस्तार एंड बीमा वाहक. आई थिंक इट्स अ वेरी गुड मूव टवर्ड्स पेनिट्रेशन ऑफ इंश्योरेंस इन इंडिया.
So I'll give certain data. We are talking about insurance premium increasing or not because it's as a percentage of GDP. That's what the penetration talks about, density penetration, etc. or per capita premium. Now, had there not been this 100% discount, you would have seen a different number. So I'll give you certain data and statistics on the number of policies sold. 7 years back, the number of policies sold in India were 22 crores. I'm talking about general insurance policies. Last year, it was 35 crores. However, you see the penetration decreasing. How that has happened? Because the premium has gone down as a percentage of GDP, but absolute increase is there. When I entered the insurance industry, the total premium of the industry was 3,000 crores. Last year, we almost touched 3 lakh crores. Which year, sir? 2000 odd, 2002, 3 types. From 3,000 crores to 3 lakh crores. The number of agents that time were few thousands. Last year, we closed with 49.5 lakh agents. I'm counting about life and non-life put together agents. In terms of POSP, point of sale person, which are also distributors, 20 lakh distributors, 1 lakh MFIs, 650 plus brokers, some 500 plus corporate agents, and some 100 plus bank assurance channels. Now with these many, number of insurance companies before privatization came in were 4. Now we have 35 in general and nearly 35 odd in life, maybe 1-2 number here and there. We have 5 standalone, we have 2 specialized insurers. There is a recipe now for success which is already there. How do we encash on those recipes is now our job. Regulator, see this time I see a government which is so close to the market, which is so close to the business. We go with a problem, and if the problem is genuine, and if it is for the greater good of all, I'm talking about everybody in the industry, government is ready to move that path and they want to give a solution. So I think we are at the cusp of, you spoke about mutual fund. Now mutual fund talks about AUM, right? Assets under management. I have requested regulator, I have also requested DFS, let's talk about RUM, risk under management. Now, hypothetically of 2005 flood happening, there was a cloudburst in several regions of the country. If you see that asset and the same quantum of risk today, the losses would be more than 6x. 6x. So imagine, now you spoke about property premium, 25,000 crores of property premium is insuring 80% of the total property risk of the country. Only 25,000 crores out of 3 lakh, 8% of the industry size. Now imagine this, if this catastrophic loss has to happen, I believe that few of the insurance companies will have to shut their shops. So let's all, let's give a pat on our back. There is a number which has increased, number of policy counts. The risk under management has significantly increased from where it was, and the premiums have remained constant. You spoke about earlier premium, I'm talking about 2006 December. From 7 onwards, the de-tarification came. If you see the premium of 6 and 25, 2006 and 2025, you're still getting a 40% discount.
I am also sharing some data for insurance sector. You know, India is the 4th largest economy in the world in terms of GDP, $3.9 trillion economy. And it is expected that in 2047 Viksit Bharat, Indian economy will be around 45 to 50 trillion dollar economy. And energy sector contribution in GDP is around 5%. So $2 trillion economy is untouched by insurance company. So I think insurance companies should focus the energy sector also. There are a lot of scope we will also earn, and risk of the energy sector also be mitigated.
Almost we are on time basically. The last questions for everyone, starting from Sunil sir, the concept reimaging risk and solution. How you want to reimagine it, so?
I think the dynamic world, the way the world is changing in terms of technology, so we should assess the risk. Every company, every big industry should assess their own risk, and the mitigation is difficult for the management because management focus in the production and distribution side. So the agency, like insurance, we have to shift to the third party. Our risk should be shifted to the third party. They should assess, and they will assess our risk should be mitigated. So now the technology, the introduction of AI, especially in energy sector, the digitization of mining, and the sector, especially the binary sector, the commercial entry of commercial mining, and the technology changes. So the risks are very much, especially the Naxal in Jharkhand, there is political issues. So terrorism, there is geopolitical in the world also, so their risk factor has increased tremendously. And management is unable to cope up this risk. So I think we should, especially the insurance sector, insurance companies should come forward to boost the management so that the Indian economy can grow. The Prime Minister has the dream of the top economy in the world by 2047. So we should think that risk should be mitigated so that Indian economy will grow.
Thank you, Mr. Mehta. We assure you, at least from the National Insurance Company, I assure you that we'll try our best. We'll try our best to penetrate the market, and we'll come to you also soon for covering Coal India. My appeal to the audience, you all are chartered accountants. You play with the figures, you know the figures. Insurance penetration in India is at a very poor stage. In India, when we are talking about insurance, it is only life insurance. Nobody cares about general insurance. For general insurance, most of the people, they know only vehicle insurance and mediclaim insurance. But there are many more insurance policies. Please educate all the people around you, the companies in which you are working, and insurance penetration is to be increased a lot. For loss assessment also, we'll need your expertise, because the change in figure or the prototype figures, you people are the first to notice those data. The fraud, the wrongdoing, everything, you have that eye to identify those losses, those frauds, future frauds rather. Let's work together and let's leave that dream of our Prime Minister, that insurance for all by 2047. Thank you.
In insurance, every time the issue of price comes, and that is genuine also, I'll say, and which every time we talk to an insurer or a broker, we say that we need to be more specific in regard to the pricing. Pricing of, we need to be more specific about the pricing, for the reason today steel is priced in a generic manner. Steel company A, B, C, D, E, F, G, H. They do the same price and all. So these pricing is the same. Now, where is the specific pricing? There are 2, 3, 4 steel companies. They have got their own risk management philosophies. Their standard of plants are different. Their maintenance philosophy is different, and everything different. So what is the incentive? Apart from other things, from a typical finance, he'll say, what is the incentive for me to spend X amount into certain features to reduce the risk or these things. Wherein this person or this person have got much worse plant, they pay the same. When we talk to the insurer, they say, no, steel is one classification, in that we do it. So why not have something wherein apart, there is classification and sub-classifications. There is steel, and further that what kind of plants they are, and risk management is a continuous practice. It's not that once in a year a risk engineer comes, roams around your risk and moves out. It's a continuous process. What he suggests, that needs to be internally deliberated, and if found some merit, why not gradually start implementing it, so that next year our plant will be in a slightly better condition than what it was in the previous year, so on and so forth. So this is the thing. But today, if somebody sees simply on numbers, they say we are priced same as A, B, or C, so why should I do that? And internally to management also, it becomes very difficult to convince that we are spending so much, or we need to spend, and further we'll get the benefit. I have worked in a company in a multinational, they had all kind of these arrangements wherein internally they used to incentivize plant. Say, if they from insurance company, they get a rate of say X. To one plant, they'll charge internal allocation X plus 10. To somebody, they'll charge X minus 5. Because that's the condition of the plant. Now, plant heads are also incentivized. That gives them some kind of carrot and stick kind of scenario. Ki boss, if you spend so much, improve your condition of your plant, you'll get benefit. Somewhere it will be compensated.
Like in health we are getting now. If you are running and there is a points over there, you will
Yeah,
get a discount.
absolutely.
Yes.
Very nice points, sir.
So I think the age of new age insurance has come up. Of course, the insurance as a game is very old, but the rules of the game have changed. So they've become new and modernized. So if you go to see, we have traditional insurance, what you're buying as property, health, etc. But there are now new age insurance also available, something like a parametric insurance, which is an index-based solution. So there is something like surety bonds, there is something like taxation liability, there is something like litigation buyout. I have not seen many clients know about it, but I've seen hardly few clients buying it. So there are multiple new insurances which have come up, and for your contract certainty, which means next year also you'll get a renewal, and for your contract sustainability on the price, etc., we will have to think about these additional features. And what sir also spoke about risk management is an absolute correct point. And we call it as TCOR, total cost of risk. When a claim happens, and claim does happen in property, the incidence ratio is nearly 3%. And many people say, I don't need an insurance because there are no claims. No, I agree there are no claims. In 30 years, that means all the more reason you'll get a claim. So they should buying insurance more. So they'll have to understand the concept of TCOR, the total cost of risk, where premium cost is not more than 15 to 20% of the TCOR value. The remaining 80% goes in risk management. So risk management is going to be the key. People will have to invest into risk management for them to get insured. And there are newer models which will come in. India does not allow this, but internationally, there are profit commissions. So there are, in 3 years, 4 years, if there is no loss, there is a part of the premium which is given back to the client. Let's work on those models. Of course, not in India, but outside India, there are models. So someday India will also learn to the art of, passing on the profits if there is a profit in the portfolio. And one more thing last, experience-based underwriting will stop and exposure-based underwriting will start. What is experience-based? Last 5 years, there is no claim. It doesn't mean the premium will become zero. We have to see the exposure. In 30 years, there is going to be only one claim. And that year will wipe out next 100 years premium. So we'll have to think about the exposure base so that insurers and clients both benefit.
There was the example of the wording. Yeah, wording. 5,000 crore का loss is and that is restricted to
12,000 crores.
12,000 crores. And this is restricted to only 200 and 500 crores.
500 crores. That was the limit of the reinsurer.
This is the magic of insurance. There was a claim for 5,000 crore, but due to the wording in the policy, 12,000 crores, and due to the wording in the policy, that has been restricted to only 500 crores. Anyway, but just last question, since it is a CA gathering, so before going to the floor for the question answer session, just last question, since lot of suggestions which we have discussed about the reform in the insurance sector, yeah, we can be improved accordingly, and lot of brightest mind is the CA basically. So where we are looking forward for the role of increasing the role of CA in the insurance world, or ICAI is a great platform. They can suggest, like they are suggesting to the ministry over the finance and lot of regulations act. So whether ICAI can be a good tool for reforming and some suggesting and some modification in the act or something like that. In Income Tax Act we have reformed. Lot of reforms has been done by the ICAI. So just last questions from the panel.
Yes, ICAI can be part of our insurance world. We are working with many chartered accountants. So the many chartered accountants are in our company, and the insurers panel. We need chartered accountants in that for forensic audit. And in reinsurance department also, we are working with many chartered accountants. And so for calculation, yeah, claims team also. So for calculation of our property damage claims or loss of profit claims, business interruption claims. So CAs are integral part of our organization.
My take is just without CA, no finance function can work. So CA is a person which will tell that how healthy the top line, bottom line, or whatever line it's there. So he's the person who better understands which entries to make, which side, which is profit, which is loss, and what could be the pricing. Although pricing comes from actuaries, right? But CAs also, in a decent way, they can say, look, these portfolios have been performing well, not well. What was the delta price increase, or what other financial measures can be taken to do that? All right, as far as the numbers are concerned, about the clauses and all, for that the different set of people are there, that could be CA also. But CA should not talk about the clauses. What does that clause mean? They are very good at numbers, no doubt, but for clauses, they can very well learn, and they are the asset, and business interruption policy cannot move actually without them, whether it's a policy taking to claim conclusion. So CA is a very important part of entire insurance thing. Yes.
Can you thought about the grading system? Like there is a CRISIL or some rating agency from the RBI. So for client rating, there should be grade of A plus, A, double B, C, like that. What we are talking about, the good insurance and bad insurance grading and everything. That can be assigned for that is a great job for the CA. Just come in the mind basically. Yeah, please.
So, see, I think being a third party, you are the closest to the client and the financial balance sheet of the client. So I don't think there is anybody closer to you all. We all come into the picture only when there is a claim. So you guys, when actually there is initially, you should have a tick box activity as to one is which insurance the client has bought. Pure insurance, has he bought insurance, yes or no? That binary function is going to let the client in a deep problems. So whether he has got insurance, yes. How many insurances he has got, that. And third point beyond this is, like you said about wordings, what are the wordings you have got? Of course, that's not your job, it's a job of risk manager. So maybe in future, in fact, we have also recommended that if we can work with a CA for some kind of understanding, only if the regulator allows, we would want to work with every chartered accountant to give the risk management advice to every client as to how they should be looking at the client's portfolio of insurance. And that is what is going to save the client. Because if there is no client, if there is no balance sheet, you don't exist, we don't exist. So it's in our common interest, it's in the interest of the client for sure, and interest of the economy that everybody should do well, the company should be sustainable, and they should be remaining for a long time.
Thank you, sir. Thank you. We are going short of time. So any questions from the floor, basically, sir? Please, now. Yeah, please, sir.
My name is Pratik Panda. I have a specific question that how the whole insurance industry is seeing the future of the cyber insurance in India from an individual person's perspective to the Nifty 50 companies.
So the cyber insurance, many insurance companies have designed that personal cyber policies also. We at National Insurance, we are also in a process to design that policy. But cyber policy for the industries and for the corporates is very well there. And future of cyber liability policy is, it's like booming. Because of the increase in the number of cyber claims and all, episodes, all that ransomware and all those things. So the market is booming.
Just to add his questions, basically, ma'am. How much claims we have settled in the cyber claim, basically, so far? We are talking about the cyber claims and all cyber coverage and all these things. Is there any data ki how much claims we have settled so far in the cyber claim?
So I don't have that data, but last week only I approved one cyber claim.
That's great. That's great. Bhai. Good news for us. With this, we are going to end of the session because, please, sir.
My question to all of you on the dais, we are talking cashless. I mean, in reference to the refund, cashless, it's very smart word. But most of the persons who are passing the insurance claim in any insurance, particularly for the health insurance, their role is negative. Attitude is not positive at all. They are trying how it can be deferred or how it can be rejected. So it's not individually for me. I'm asking for everyone who cannot approach and who may not be able to communicate it in the way it should be to the proper authorities. It's ethically you people who should try to remove this hurdle for the normal person who is obtaining the policies for income tax purpose. And if he is being aware, then he is trying to get the benefit. The word medical mafia, I'm sorry, they are crippling the financial life, and insurance should try to remove that. This is my question, this is my humble suggestion to you people. Try to reply. Thank you.
Thank you, sir. Introduce you, please, sir. Can we come to know your name, please?
My name is Mohanlal Parikh, and of course I am a chartered accountant,
Obviously,
practicing chartered accountant. But before that, I am a social worker.
Thank you, sir.
Before
Thank you.
that,
Very nice question. And I also want to add something over there. There is a class of people in India, like some are coverage with the government policies and some are taking the policies. A lot of people are in India, they are not aware about the health, but they are without the health policy in rural areas or something like that. So, ma'am, both can be combined together and can answer accordingly.
So that one word you used about medical, that is a perfect word. It is a correct word. Last year, some data was published about rejection of claim. And rejection of claim in public sector general insurance companies was only 1%. It is not that people want to reject the claims, but unfortunately in India, we don't have a medical regulator. We need a regulator in all these things. A hospital in one area, for example, I'm talking about this new town. One hospital is charging X amount for operation, for a surgical treatment, and other hospital, just 500 meters away from that hospital, is charging that X plus 5 with the same facilities, but there is nobody to regulate that amount. So when the insurance company is paying the claims, health claims, they have a benchmark, the rate fixed in that area. So one hospital with whom they have made a cashless arrangement or that agreement, PPN agreement. The second hospital claim also will be paid as per that because it is not regulated by any other. We have seen that when the policy is 1 lakh rupee, then for the same treatment, the treatment cost will be 70,000. If the policy is of 5,000, then it is 3.5 lakhs for the same treatment. So no insurance company is interested in rejecting the claims. The customer is our valued client. We are not interested to reject the claim. But one more thing I would like to answer you that you first said that the policy is taken just to get income tax benefit. It should not be. It is not only the income tax benefit. Policy should be taken to cover your risk. Income tax benefit is a secondary benefit. So the correct policy which you need, that policy should be taken by you. Thank you.
And sir, this is also fact. जो पॉलिसी ले लेंगे तो उसमें इंश्योरेंस के लिए मतलब इनकम टैक्स बेनिफिट के लिए इट्स फाइन, बट जब क्लेम आएगा जरूर क्लेम करेंगे उस हिसाब से. बट मैम But ma'am, it's very true कि hospitals are charging the different rate, and this is the one of the greatest cause to increase the premium personal health policies accordingly. तो कैसे solutions क्या आपने board का एक panel या GIC जैसा कुछ एक forum या what can be the best solution so that कि there should be a system. Obviously है quality के लिए अलग-अलग prices होते हैं. If I go to the 5-star hospitals, then there is a different rate. If I go to the general hospital or something like that, तो obviously rate may be different as per their category.
So if we'll talk about Kolkata, then in Kolkata also there are some hospitals empaneled for Swasthya Sathi policy. The same hospital is charging that fixed package rate of government in Swasthya Sathi, and the same hospital is treating the patient who has 10 lakhs policies, private policy, with 3 times more amount. So there is a regulator that we have requested IRDAI, a regulator, medical regulator is very much required in the country.
That will be a great solution for every individual in India, basically. That should be taken up by insurance companies as well as
and right
social
now,
activists also, sir.
General Insurance Council is in a process to empanel hospitals. So we hope that all the private hospitals will be able to empanel them. And when we empanel, then there will be fixed rate for those hospitals. So the customer will not be at loss.
Yeah, to the extent that can be a very great solutions over there. Thank you very much for all panelists. And today we have a great discussion and have some thought over like new concept IUM instead of AUM. That is really great. We understand some reinsurance and insurance companies' point of view, industry point of view. What are the lot of challenges for the industry that we have already mentioned over there. We thought we think in future we can get some solutions over there. With this, thank you very much. We are short of time. Next session is there. Thank you very much for all the dignitaries of the dais and on the dais. Thank you very much. And thank you, Subham and Chirag bhai. Thank you very much. Thank you.
We thank you, ICAI, to invite us for this session. And thank you, Mr. Chaurasia, for handling this.
So, for a few seconds. So, just a second. Yeah. To sum up, risk is not a 4-letter word. It is an opportunity in a crisp suit. And now, a heartfelt thank you from our Deputy Convener, C. Chirag Agrawal ji.
Ladies and gentlemen, as we wrap up this electrifying hour, I extend my deepest gratitude to our visionary speakers, our dynamic moderator, especially the organizing team and all of you for making the Golden Jubilee sessions sparkle. Let's carry this momentum forward and make the next half century even more spectacular. Thank you and enjoy the rest of the conference. Thank you all.
Hello, check.